Good day, everyone. Welcome back to my weekly outlook session. So, my name is SK, and today we're going to look at how we're going to look at the market moving on for the second week of April, which starts from 8th of April until around 8, 9, 10, 12 of April. Okay, so if you're ready, I'm ready. So let's just zoom in and let's just check out the market. So I'm just going to go quickly on this week's outlook because there's not much change compared to what we saw last week. Why I'm going to show you now. Last week we were at resistance. Now we are still stuck at the same resistance zone. It's just that we have entered deeper into the resistance zone. What do I mean by deeper? Let me just show you. So as usual, I'm going to start with SPY, DJI, and Nasdaq, or I'm going to use QQQ. Okay, so zooming in into S&P 500, I use the ETF, which is the SPY. Again, I'm just going to do the same thing pretty much like my previous week analysis. So I'm not going to go very slowly about it. So I'm just going to quickly show you all that we are still in the resistance zones, and of course support is pretty far, which is around here. That's about 260, and we are here back at the resistance. So we had a gap up over here. You can see the gap up. If I zoom in, you can see the gap up. So that shows an extra enthusiasm to buy or going into an accelerated bull mode. But it could also mean that it's an exhaustion gap. That means that the bull run is about to slow down, come to an end. Because what does it actually mean is this. Sometimes when you see this kind of gap near the resistance, it's basically showing an accelerated on extra bullishness. This extra bullishness sometimes also means the other way around. That means that the market is coming to an end. What I mean by the bull is not the 10 years bull run, but I'm talking about this short bull run which started from late December 2018 up to now. This extra enthusiasm could actually mean that the current rally is probably going to take a rest soon. Okay, so nothing much changes. We are still in a resistance zone. We are very much quickly approaching the historical high of a close. Is of course historical high close is at 291, and the historical high goes around about 293.94 or 294. I'm pretty confident that we are probably going to try to touch the 2900 before having some retracements, or at least to close this gap over here. Okay, but that is just a speculation out of we always have this psychological number where we try to the round number holds as a support or a resistance. So the market may give a good feel factor, touch 2900, and then all the CNBC and everything will come up with this news. Market has touched 2900 and etc. etc. So that could probably happen before any retracement or corrections for the time being. Okay, so in conclusion, we are still in the resistance zone. We have just went deeper into the resistance zone. Whereas on the Dow Jones, which is another index that most people look at, we are also in the same story. So as I said, almost every single index are just showing the same story. Nothing much has changed, and this is over here. Yeah, so this is another resistance zone. So we have pretty much up to probably Dow Jones could at least test 26,700 this week. But again, that's just a pure speculation. All I know is it's just in resistance zone. It's pretty much in a very risky area at the moment, and support continue to be around here, 24,000. And QQQ. So yeah, we are almost there as well. If I were to mark the resistance, so it's here, and you can see that we are back deeper into the resistance zone. So sometimes when market is pretty bullish, we kind of forget the basic principle of investing in the stock market. We're supposed to buy at support, and we're supposed to sell at resistance, alright? And most of us actually know about it. It's not that we do not know about it. We actually know about it. But because we get carried away with the bullish momentum, with all those good news, we stray away from the basic principle of investing using technical analysis. All right. So that is the same thing over here again. We are in resistance. So the decision is pretty simple. We should be avoiding from taking any long positions, at least for temporarily, until probably if we break beyond this historical high. Then there is a breakout trading strategy, which is totally different. But for now, the only method we should be actually applying is to buy at support and sell at resistance. And right now, where are we? We are in resistance. Almost every single index, we are at a resistance. On Dow Jones, on S&P 500, on Nasdaq, all of those, we are actually in the resistance zone. Now, apart from those all those three major index, we can also look at the Russell 2000. Okay, it's a small cap. So again, it's almost kind of the similar story. Actually, the resistance is pretty much over here. You could see that here was resisted, came down, resisted, came down. This was an overshoot. Okay, but again after that, we kind of like almost approached that and came down, and then again touched it, came down. So we are kind of like again in the resistance zone for Russell 2000 as well. Of all the index, probably Russell 2000 is the one which is not really approaching its historical high yet. Historical high is way far. Okay, it's still pretty much far from its historical high. So again, almost all the index are at the resistance zone. So we all know all those index at resistance zone. So this week, I would like to specifically go into the banking industries or like financial sector, because this coming week is where we welcome the earnings week. Usually earnings week this week is not, the first week is not nothing much, but we usually have it started off with the banks, as where this Friday on 12th of April, if I'm not wrong. Yes, 12th on April, we have JP Morgan reporting as well as Wells Fargo. So that is why I would like to specifically discuss about all those banking stocks. But before I just move on to that, let me just show what has basically taken place from the sector perspective for the whole of last week, which is the first week of April. Okay. Yes, we had a quick jump. We saw in the chart S&P 500 jumped by 2%. It's just caught me by surprise that despite already being at the resistance zone, S&P is still able to jump by 2%. These jumps, these moves are continuously being driven by the good rumors. Good rumors. I'm again saying it, good rumors, because it's not confirmed. Good rumors, good updates from this US-China trade deal. So this continues to boost the market. It's how market usually works. Until there is no confirmed news, based on all those rumors, market moves. So now all the rumors are good news about the trade deals. Thus, the market continues to just keep moving. This is where we have to keep our analysis in check. We have to keep to our principles. Resistance, we don't buy. Support, we buy. Now we are resistance, so we avoid from buying. Based on this movement for the last whole week, we can easily see the 2 weeks before that, all right, basically the financials was lagging. Okay, the financials was lagging, but last week it picked up really good. It moved up as much as 3.46%, and the biggest mover is the materials, 4.18%. So financial moved, technology moved, and the material moved. The one did not move is consumer staples as well as utilities. So this actually even shows a clearer image that the investors, traders are willing to take the extra risk and move their money to risky sectors. Okay, sectors like technology and the financials all are considered as cyclical or about to be a risky sector. So the fact that they are willing to move their funds there shows that they are willing to take that extra risk. Thus, stocks that are supposed to do well in a rough market or considered as very safe are not doing that well, which is the consumer staples and as well as the utilities. Pretty understandable on how they are moving the funds at the moment. So that's basically what took place. So financial took a huge pickup. So we're going to focus on this financial sector at the moment, because Earnings are going to come out soon. This week is JPM and WFC, Wells Fargo. Then week after will be Citigroup and all the rest. So let's just take a look at XLF first, which is the financial. So just remember one thing about XLF ETF, which represents overall the financial industries. JP Morgan, Bank of America, Citibank all carries quite a big heavy weightage in this ETF. But the biggest weightage actually comes from Berkshire Hathaway. So you got to remember it's a bit skewed, a bit different in terms of the index movement. But nevertheless, it's still a good index for us to analyze. So if we look from a long term out all the way from 2009 and stuff after the crisis, we can see that banks have moved pretty much very well, steady up, and it's been recovering since its worst disaster. And you can see the support is pretty much over here. Okay, I'm not going to adjust it a bit. I'm just going to do this. All right. So it's touched this ground, and touched this ground, and a quick rebound as well. So from a long perspective, yes, it has rebounded from its long-term support and such. But what we have to pay attention as well is on the short-term view. So let me just bring you all into the short-term view. Some of you are probably aware, based on this itself, we can see that we are here because we have this kind of a channel that is moving for the stock, for XLF, okay? We each time, almost every single time we actually hit this particular resistant trend line, we kind of make a retracement. That's basically what's happening. And right now, where are we? Yes, it's pretty obvious again. We are at the resistance line. A quick rebound as of last week still brought us just to the resistance line. Now, just to highlight, if we're going to focus just on this short term, okay, we can see this is where the biggest sell-off took place. Okay, that is about in the week of 18 March 2019. So that's where the biggest sell-off took place. So for the market to turn around, for financial industry or the banking industry to turn around, coming earnings, it should be able to break the high of this 18 March 2019, which stands around $27.10. So this is where we should be looking at. If it is able to break above the $27.10, we have a very high possibility of it going all the way up to 30 at least for now to retest its previous highest resistance. Okay, so watch out. Look at how the banks are performing after earnings has been announced this week, especially on Friday, and then after the week after, see how it actually moves, and then see if it is able to break above this 27.10. If it is yes, then S&P 500 will be able to follow up together with it and move up as well. So, talking about XLF, let's just zoom in and look at the top 3 banks that are part of the S&P 500. So, JPM, Bank of America, and Citibank are the top 3 biggest banks that carries the highest weightage in the S&P 500. And all those 3 banks are pretty much carrying the same story as well. That in a shorter term, all right, I'm not talking about long term, I'm talking about short term, because we're talking about trading based on the earnings that's coming up. We can see that almost all of them are pretty much showing the same story. So we have this floor. We have this floor for the JPM, and floor basically means support or bias zone, and we have this for the resistance. Okay, so that is basically what's happening with JPM. We have a bit of a buffer here before it reaches the resistance, but again, take a note over here. Let me just readjust that. Not manual, auto. So you can see again the price action. This is where the huge sell-off took place. So this is where the sellers were queuing earlier to sell it off. So as soon as price reached here, the sellers came in a volume, in a huge pressure. They started selling off, and that is why we have this big sell-off. So when the market tries to climb back to this level, we have all those previous sellers who missed out on selling it earlier, who will be waiting at this price level 106 to 108. So now the idea is to see if these current buyers that are coming in will be able to beat all those remaining sellers who are waiting here. If they are able to beat, then the buyers have won the war. Because remember, end of the day, price action is all about war between the buyers and sellers, war between bulls and bears. That's basically market, okay? So in this war, let's see if in JPM the buyers can overwhelmingly overthrow the sellers over here. Watch out for this level. Let me just highlight for you all that area. Watch out for this price range. Can it break above it? Okay, can it beat all those remaining sellers? So that is JPM. So based on this itself, you can see that some people like to take a bet before the earnings and such. And we are here at resistance. So going long at any point of this time, it will not be really that advisable. And JPM is the same. And let's just see the next one. Bank of America. Okay. Once this was always mentioned as one of the top banks and such. Are we the same story? Yes, we are kind of like in the same story. I just show you over here. Let me just draw that just to show you all, just to make things easier. This is even closer to the resistance compared to JPM. So again, the last week's bounce brought us back into the resistance zone. We are again in the same story. Strong sell-off over here. Can you see again? Let's take a note. This is important to take a note. Can you see the sell when the price tried to go up here? The sellers came in and pushed back over here, and then it started going lower. So all those sellers who missed out on selling on this area, they'll be waiting to see if the price comes back and they can start selling. And that's exactly what took place. You can see that the price last week tried to move beyond this level. This is where the sellers were very active before this. And when as soon as it reached that previous sellers active area, the sellers came in and pushed back the price lower. So this is where the sellers, it shows the sellers are still active. Okay. So that is pretty much with Bank of America. At least JPM has slightly more buffer to reach its resistance. But Bank of America has already touched that. And the third one that I want to look at is actually Citigroup. We have to zoom in a bit more because Citibank's price is totally different. You know what happened in 2008 and such. So based on the what's happening over here on the shorter term perspective, and I'm just going to draw back and I'm going to repeat the same thing. We have that when we have that resistance zone. We are back there. Okay, so zoom in. So what does this show us in conclusion? All those banks, Citibank, Bank of America, JPM, all of them are in a shorter term resistance zone. But remember, this is the channel that has been moving. If it is able to break above this resistance channel, and then we can call that there will be a much stronger call for banks to move up and reach to its historical high, which is at least for Citibank is 80, for JPM is that's about 118, and then for Bank of America that will be around $33. So those are the levels that we should watch out if the stocks are able to break above its resistance trend line. If it does not, expect it to go back down all the way to its previous support. Okay, so these are the levels that I've shared with you all. I hope it is useful for you. And just one last bank that I wanted to share with you all is Wells Fargo. I don't really like this stock because they have a lot of stories, not good stories about them, all about their malpractices. And because they're going to report this Friday, this is pretty much the only stock that is pretty much close to its support. Okay, one of those banking sector, and we all know why it is pretty much close. And based on what's happening right now, again, I don't like to do any calls of what's going to happen in the earnings and such. But if you ever think about taking a bet, take a bet about banks, you want to take a, though sometimes when you have funds and you just want to play with 2% of your account or 1%, try to take a bet and see if you can take a quick buck, or if you lose, it's just fine, that kind of thing. Then for me, Wells Fargo will be that one bank that I'm willing to take a bet to see if it is able to move up, jump based on earnings, because that's one of those very few stocks which are actually at a very strong support. That's over here, $48. Okay, so if it jumps, you have room for it to move all the way to at least $60. Okay, so that is my bet, that is my call. But apart from that, banking industry is pretty much in a resistance zone. So I wish all of y'all a happy, good trading a week for this week. Remember again the motto of the week: resistance is where we sell, support is where we buy. Alright guys, that's about it. Thank you very much. Signing off, SK, and I wish you all a great trading week. Thank you.